Welcome back, folks. Episode 2 of the True Money podcast. We covered what is Bitcoin in episode 1. I want to move on to a much wider topic now. What is money? Which is, you could talk about that topic for hours, right? You know, the history of money, etc. But what we'll do, we'll try and break it down into smaller subtopics so that we can get some smaller, shorter videos out. Just building it up, talking about some of the subcomponents of that much larger question, what is money? We'll start off by looking at what is fiat currency. And of course, this video series is all based around the topic of Bitcoin. And, you know, this is one where Bitcoiners have got it entirely correct. There are serious, significant problems with fiat currency. I think that anyone listening to this video is probably already aware of that. And that, to me, is one of the great positives that has come from the Bitcoin movement. Increased public awareness of what is actually happening with our money system, this fiat currency system that we've been living under for the most part of 100 years now, which is an aberration really in the history of money. It's a dishonest money system, but let's get into that. We'll get into that's the topic of today's video. What is fiat currency? It's a really interesting topic in itself, and I could probably talk about it for hours, but in the interest of trying to keep it short and to the point, I'll just give some summary, and I'll point to some books that are really, really interesting for anyone that has never read these books. They really are must-reads for anyone that's interested in the money system and how we got to where we are today with a fiat currency system. This one on screen is Murray Rothbard's What Has Government Done to Our Money? You can see the summary of it here. Details the history of money from early barter systems to the gold standard to present day systems of, they call it paper money, but it's fiat currency. And anyone who's listened to Michael Maloney and his fantastic series on YouTube, The Hidden Secrets of Money, I think it's called. One of Mike's key straplines is fiat currency is not money, and I have to say that I agree with that, and we'll look at the reasons why in this video. But there's Murray Rothbard's book, What Has Government Done to Our Money? Highly recommended. And one other one, if you're really interested in understanding the Federal Reserve money creation system in the US, is G. Edward Griffin, and it's the Creature from Jekyll Isle book about the creation of the Federal Reserve. Very interesting that Google describe him as a conspiracy theorist. Well, I would suggest you read his book and decide for yourself. So, fiat currency, my summary of the history of it is that bankers did not like the gold standard. You know, gold and silver have been money for millennia, thousands of years. I've personally got gold coins from Roman times, Byzantine coins from 1500 years ago. And whenever you hold these coins in your hand, you understand the history of it and why this entity, why gold has been money for so long. Bankers don't like it because it constrained their ability to make money, and of course bankers make money by lending money, and it constrained government's ability to spend money. The banking system, of course, was built up around fractional reserve lending, where bankers realised that once folks had deposited gold with them, that the receipts for those gold were much easier to trade with, and those receipts were passed around in the exchange of goods and services, without many folk ever coming to the bank and requesting return of their actual money, which was gold. So the receipts for the gold ended up being almost becoming money themselves. Let's say they were a commonly used medium of exchange. But what's critical about this is that people decided that they didn't trust the banks, or if the banks had lent out too much money, which would commonly happen, people would realise, hey, a particular bank, and of course at that time there were many different banks in competition with each other, that they would just go and request their gold and withdraw it completely from the system, and that would cause problems for banks that have overextended. They did not have enough gold to back up the amount of paper that they had put out into circulation. So those receipts, really, when you look at them, those banking receipts were fraudulent, because they represented money that was not there. Why would governments allow this fraudulent behaviour? Well, it benefited government, right? Because it increased circulation of goods and services. It essentially pumped the economy, and that increased tax receipts for government. So they turned a blind eye to this fraud, and of course, as we know, government and banks work together to create money systems that give them the advantage rather than the people. Whereas a gold money system, it's an honest money system, and it gives people the choice to simply withdraw out of the banking system if they wish to do so. We'll see on screen a quote from Henry Ford: "It's well enough the people of the nation do not understand our banking and money system, for if they did, there would be a revolution before tomorrow morning." Fairly famous quote, and it's accurate. And this goes to explain why there's very little education offered as part of standard national curriculum to teach people the history of money, teach people what money is. Government really don't want people to realise that their fiat currency is not money, or if it is money, it's a very poor money. There's another quote from Alan Greenspan that we'll have a quick look at that gives a little bit more detail around this. So Alan Greenspan, if you don't know, was a Fed chair, but before he was a Federal Reserve chairperson, he was a very vocal supporter of gold. And you can see in 1966, he's written a paper where he said the following: "In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There is no safe store of value. If there were, the government would have to make its holding illegal." Now that is some statement from somebody that goes on to become the top banker in the world. So it goes on to say, if everyone decided to convert all his bank deposits to copper, silver, or any other good, bank deposits, so this is credit money, i.e. fiat money, would lose their purchasing power, and government created bank credit, i.e. fiat, would be worthless. The financial policy of the welfare state requires that there be no way for the owners of wealth to protect themselves. This is the shabby secret of the welfare statist tirades against gold. Deficit spending is simply a scheme for the confiscation of wealth. So of course, he didn't say any of this while he was the Fed chair. In fact, many of you will be aware that Greenspan actually paved the way for the 2008 collapse by easy money. He pumped the housing market by super low interest rates over a long period of time. So that's really interesting that he changed his tune somewhat from a previous article, and one has to believe that this was his real honest belief. And then once he became a Fed chair, that kind of his own opinion had to take a back seat. But I thought I would highlight this one because it goes back to, if we look at it in the context of Henry Ford's statement, you can see why governments do not want the general public to be aware of the fiat currency scheme. It's a scheme for the confiscation of the wealth of the people. And just to highlight again this statement, the government would have to make its holding illegal. We'll come back and look at that in detail in a later video where we look at Bitcoin and what the future might hold for Bitcoin. Here's another more recent quote around the US dollar in particular, but this could be applied to any fiat currency. And this is why I opened up the video by talking about Mike Maloney's view on this, that fiat currency is not money. And this is Barry Ritholtz, respected economist, his latest book, I believe, where he says the dollar has lost 96% of its purchasing power over the last century. And he says that it's a misleading claim. And the reason why he says that this is misleading is that it was never intended to be a long-term store of value. So that is some statement. The US dollar is not a long-term store of value. That was never its intended purpose. Rather, it's a medium of exchange. So that's entirely correct. That is accurate. But what this is an admission that fiat currency cannot provide a store of value function in the long term, and often in the medium and short terms. If you look at hyperinflationary periods where the money printers went on full tilt, nearly infinite money creation, of course it's going to be valueless even in the short term. But here we have all the empirical evidence points to this as well, that there is no store of value function in a fiat currency. Therefore, fiat currency cannot be money, because money must be a medium of exchange, a unit of account, and a store of value. We'll have a look at some of this loss of value over time. Barry says in this book, 96%. Since 1933, when the US demanded that citizens hand in all their gold and gold certificates, they called it hoarding, and they wanted that. Of course, most folks will be aware that when they took the gold, they then devalued the paper dollar, and actually during this period of time went on a massive legal campaign to basically stamp gold out from existence, from its place as the primary money. This through a series of legal actions to remove any clauses in contracts for payability in gold. Really great book on this topic, American Default by Sebastian Edwards. I highly recommend that book on this topic of the legal attacks on gold clauses. Where the courts incorrectly decided the Congress could simply regulate the money system any way it pleases, which is incorrect, because the Constitution defined gold and silver, defined the US dollar as weights of gold and silver. Only gold and silver were to be money, according to the Constitution. So Congress has to work within that, of course, and these gold clause cases were incorrectly decided and paved the way for a fully fiat future, which is not good for general folk. You can see here what we've got is the difference in notes over the years in and around 1933, 1934, where gold was removed from the money system. I think this is a close-up of some of the notes. So this one here is a 1928 note, where you could redeem this in gold at a defined, we've got it here, we've got the definition here, 1.5 grams of fine gold you could have got from the bank for that note. 1928 Federal Reserve note, redeemable in gold. And they've changed it a couple of years later to just say, this note is legal tender. So that's some switcheroo. Look, it looks near identical to the untrained eye, but one is worth significantly more than the other. And they did this with silver as well. These notes would have been redeemable in silver. Also under the bimetallic standard, which is prior to 1900, it was redeemable in silver or gold. And from I think from 1900 onwards, it was only the gold certificates at 1.5 grams. Let's have a quick look at what that means now. 1.5 grams of fine gold. How much that's worth today. $106 per gram of gold today. 1.6 grams of gold is worth $170. So what $1 was exchangeable for into gold back in 1933, when you could do that, that is a 99.4% loss of purchasing power, based on the dollar's valuation in 1933 versus what it is today. And why this is important to understand is that Bitcoiners have got that entirely correct, that the fiat currency system is an offence against the people, that it cannot be a store of value in the long term, certainly not, and often in the medium or short terms. So what can be done about this? And Bitcoiners claim that Bitcoin is the solution. So whenever you look at the history of fiat currencies, there's so much information out there about these failures. I would recommend just taking some time, having a look at it yourself. I find this topic fascinating. They all have a limited lifespan. Approximately 775 fiat currencies have failed completely, with an estimated average lifespan of about 27 years. So this one, with the US dollar being global reserve currency of the world for quite some time now. Fully fiat currency, of course, since 1971. So that is 54 years at this point that it's been fully fiat. That is already well past its due date for collapse. And I think that we're getting closer to that, of course, as every year goes by. The debt load is unsustainable as well. Having a fiat currency is one thing. Having a debt-based fiat currency is quite another. That is puts tremendous pressure on governments. This debt is completely not repayable in any way, shape or form. There's only so much that you can tax your citizens, right? That's the only income that a government can create to repay that debt. So it's entirely unsustainable, clearly. And it's the reason why I'm rushing out a series of videos on this topic, rather than trying to write a book on it. It would take too long. We're in the middle of a monetary change right now, and it's clear whenever you look at the valuations in the financial markets of the dollar, of gold in particular, because of course, even though governments have attacked gold over the last 100 years and sought to remove it as the base of the money system, central banks know that gold is the base, and they have continued to, well, the smart ones have continued to stack gold ready for the failure of fiat currencies, so that they have something to rebuild on. Say the smart ones, of course. Canada sold all their gold. Nobody really knows how much gold the US has, but it's interesting in recent weeks that there have been massive reports of upwards of 2,000 tons of gold being, I'll say, repatriated. What else could it be? They're not purchasing new gold. This must be gold that they had leased out. So massive inflows of gold coming into the US in recent weeks. So there's something afoot in the monetary system, and it's overdue, because the US dollar as fiat reserve currency of the world obviously can't go on forever. It has to stop at some point. What is the new system going to be after that ends? Well, central banks hold all the gold, and you would think, have the power to dictate any type of revaluation or of fiat currencies, or any new rules for perhaps a global monetary system. And this is where Bitcoiners have come in and said that Bitcoin is capable of providing an alternative global money system. I believe the strapline on the Bitcoin Standard book by Saifuddin Ammous is the decentralized alternative to central banking. That's questionable. We'll get into that in one of the forthcoming videos.